What's up, everyone? Good morning, traders. Hope everyone's doing well today on Wednesday, February 1st, the first day of a new month. Hope January was good to you. And we have the Fed, the Federal Reserve meeting minutes are today. We have the FOMC today. We have rate hike decisions today. And all that's going to happen at 2 p.m. Eastern, which we're going to be trading with our trading room live. We'll see how that shapes up. But leading into that, there's a few things to talk about. The first Fed speech of the year, and everyone, traders, investors, is watching this very, very closely and is expecting a 25 basis point hike today, down from 50 basis points in the last meeting in December, which followed 4 total back-to-back 75 basis point hikes. So it follows recent economic data that showed inflation decelerating over the past few months, giving evidence that rate hikes are starting to actually be effective. Now, on Friday, core PCE inflation, the Fed's preferred measure, came in at 4.4% year over year for December, though the figure still remains above the bank's 2% target goal. So that's something that everyone's going to be watching over the next few months naturally to see how that shapes up. So it's coming down fairly well overall. There's still a decent bit to go, but we'll see a lot of what is to be expected today from Jerome Powell and the Fed. So the Fed's rapid tightening, which started in March 2022, was intended to reduce demand for goods and services and bring it more into balance with supply to ease inflation pressures. Jerome Powell and his friends over at the Federal Reserve are now assessing the impact of tightening already in place. So keep a close eye on what the press conference says today at 2:30 p.m. Eastern, where he's going to be talking about multiple aspects of inflation, right? The ongoing interest rate increases, the Fed dot plot, right? The expected economic conditions to come, and more on that. So many recent remarks from Fed officials expected the terminal rate to exceed 5%, with none indicating a willingness to cut for the rest of the year. So that's going to be pretty interesting to see how, of course, that comes into the dot plot and how that shapes up today. Stocks aren't necessarily reflecting that outlook. We've seen a pretty decent rally here over the last few days, and I don't necessarily think that it's going to end just now. Maybe in and around the Fed, because typically what happens is we get the Fed announcement, right? Whatever hikes they are, you'll get probably somewhat of a pop in this, maybe enter that distribution block above 4105, maybe hit even the top end of the distribution block 4160s. And then over the next few days, as we've seen in the last Federal Reserve meetings and announcements, there has been a pretty decent drop, about, I think it was like 5 to 7% on average in the last 4 meetings. So we'll see how that kind of shapes up today. I'm still looking for somewhat of the upside. I think overall trading conditions are going to be a lot slower as we come into this. We've also ended the month. I think a lot of eyes are on Jerome Powell with a 99 point whatever percent chance of an increase of a 25 basis point hike today. So to add to that, we also have Meta that comes out after the bell today that sparks another earnings play, right? Snapchat reported earnings yesterday, which may have jarred some sentiment. Equities wrapped up January with a pretty strong rally, right? The S&P 500 was up 6.2%, and that rally means that stocks hit the so-called January indicator trifecta, which gives the blue chip index close to, if not 100%, historical probability of rising stronger in 2023 throughout that whole year. So that's based on the Trader's Almanac. Obviously, that doesn't really necessarily mean that all the economic conditions in the macro sense of things should be just swept under the rug. The clear leaders for the S&P 500 have been the consumer discretionary, communication services, real estate, tech, and materials. So individual players like Warner Bros, Discovery, Tesla have stood out in terms of January's top 10 best performing stocks. Tesla being up like 70 something percent. So we'll see today Snap earnings, they got pummeled. Meta, right, was gapped down a little after that. I haven't checked it since, but Meta and Google might have some kind of play off of that. But we're going to see Meta today after the bell, after the Fed. So it's going to be very interesting. And then we have Google, Amazon, Apple after tomorrow's bell, which is going to be extremely interesting. So that's something that we do need to keep our eyes on as we shape up this Fed day. So there is some news today, right? We have the ADP jobs report that came in this morning. We have the PMI manufacturing index at 945. At 10, we have ISM manufacturing index along with construction spending. And we have job openings and labor turnover survey at 10, and also EIA petroleum inventories 10:30, and then obviously the Fed. So leading into that, I'll tell you guys that it's probably going to be a slower market as we get into the Federal Reserve, right? It is the day of reckoning that everyone's been waiting for. So I expect a lot of traders and investors to be sidelined until that report comes out and we get a better understanding of what is going on with the Fed and the future expectations. So I would want to see a smaller dip in the market to get bought up into the Fed this morning. Yesterday's morning, very choppy price action. Even throughout the day, it was bullish, but it was fairly choppy as we continue to look for some of this upside in this market. So yesterday we had some pivotal levels that we crossed even before the market opened, and that really put a drive in the bullish side of the sentiment. And today, realistically, we have a level down at 4072 that I'm going to be watching. It's very immediate. Down below that, the 63 and the 55. I would like to see one of those two areas hold out if we get some sell to see if we can propel this back up. Now 85, 84 is a massive resistance that's coming out here on the S&P 500. So above that we have the 93 and then obviously the 4105, which is the top, or I should say the bottom end of a new distribution block, a massive distribution block that spans to 4160, that if we can actually accept and run over that, 4160 is going to be a near-term target that I think the bulls are going to want to see before anything really rolls over in this market. So in other somewhat related news, we had Michael Burry and Jim Cramer post yesterday. Jim Cramer says that we're in a new a new bull market and buy every dip, while Michael Burry just tweeted sell, period. So that's going to be interesting to see what the hell's going on, because those two guys are usually pretty solid fade indicators for the current most immediate price action, right? So we'll see how that shapes up overall. If that has any effect on this, but I doubt it. We're just going to be watching the FOMC and what the FOMC wants to do. And one of those guys are going to be right realistically, because they've pretty much covered the bases of what is going on. So with that being said, we're going to be trading this live in our trading room. You can do it with us at TRADEPROacademy.com on the futures side of things. We're going to be opening that room to our traders, and then we're going to see what this day really has to offer for us. So with that being said, take it slow this morning. Trade less if you're going to trade at all. Trade smaller size if you're going to trade at all. And these FOMC events usually, right, they're not the best opportunities to trade. There's a lot of movement, especially in throughout the FOMC and the press conference. So there's going to be an erratic move in one direction, and then realistically probably gets faded. So it's something that you'd have to consider as we get into this Fed. So with that being said, come check us out at TRADEPROacademy.com. If you want to trade this Fed event live with us. So that's what we're going to be doing today. It's going to be a very quiet, tame morning, and I hope everyone is excited for earnings and the Fed, which can shape up the next directional move in this market. So thank you, take care, and I'll see you guys tomorrow. We'll see tomorrow morning we'll talk about what the Fed had done and how the market shaped up.